Hey, it's Travis and Robbie with the Bell Henderson team. Thanks for joining us today for the August stats for South Tampa. It's a fun market we're in. Things are changing slightly, and we're here to report the numbers. So, Robbie, go ahead.
No, I was just going to say the numbers for 33606, 33609, 11, and 29. Those 4 zip codes.
Perfect. So tell us about the number of homes that sold last month.
Do you remember last year in 21?
Yeah.
August? It was crazy. And I will tell you that last year we had 136 homes sell in August. This year we only had 81 homes sell in August. That was down over 40%.
It's crazy.
But what's interesting is the price, when you look at the median and the average, is the price going down?
No, it's definitely going up. But just going back to the numbers, we have said this before and we'll say it again. I think it's this regular seasonality of a normal real estate market. August, generally a slower month. September, typically slower month, right? Then it picks back up again. So I think that's what we're seeing. Last year was still catch-up COVID year, so the numbers are a little off. So I think we're back on track.
And I'd say that's pretty cool because Travis has been keeping the stats since 2012, and we really do look at it, and we've kind of going back in line with those trend lines.
Yeah, for sure. So going back to your median price question, we're up to $959, which is a 39% increase from August of last year, and like almost a 7% increase from July. So it was 900 in July, and now 959.
But we are seeing a little bit more inventory. And, especially not really compared to last year, but what we're seeing is the month's supply with that number of homes that's, selling, you're at almost 3 months of inventory, which is still a seller's market because the 6-month absorption rate, but it's definitely different than last year when we were at a 1.59.
Good point. Then the number of new homes hitting the market is kind of the same from last month, from last year. We had 137 homes hit the market, about the same. So no real big changes there. Another thing, our last 2 points that are changing, days on the market, we're increasing there a little bit. So we're up to 34 days on the market in August of 2022. Just for perspective, we were at 25 days in August of 21. So 30 days-ish, that's normal. 60 days, that's still normal. It's really normal, and we're gonna start to see this climb probably a little bit each month, and that's okay.
And it is okay. I think what we're seeing in this market that we did not see over the last 12 months is something that's going back to traditional real estate, where a seller gets a little aggressive in putting it on the market, and then they need to adjust their price to get it to where it's selling. And so what we're seeing is houses are still contracting and houses are still closing. However, with the increase in inventory, you've got a few people having to adjust their price to find the buyer.
That's a good perspective. You're absolutely correct.
And then what's the big aha that everybody in the world knows about? It has doubled from a year ago.
What is that?
What is it? It's the interest rate, Coach.
Yeah.
It is the interest rate. The interest rate is, well, as of today, it's over 6%. Jumbo's a little bit less, but for the round numbers, you're at 6% compared to 2.84 a year ago.
So is that a good thing or a bad thing?
It's not a bad thing. I mean, it's a good thing in regards to it is slowing the appreciation of homes down so that the affordability factor can be put in check. But, it makes it a little harder in your monthly payment.
But is it safe to say that everyone's been spoiled for the last 3-4 years with these super low mortgage rates?
For sure.
Because last year was 2.84 in August. Will you ever see that again probably in your lifetime?
You don't want to see that again. And the reason you don't want to see that again is because that means that something bad has really happened to the economy.
Yeah, that's a great perspective.
So we don't want to see that again. And, and what's ironic is at 6% or even 6.25%, we're still below the historical trend line of 7.2. So if we went back to 1992, we're not even there yet.
Yeah, I think it's pretty close though. I mean,
we feel it.
Yeah, for sure. But it's normal. 6% is a normal. It's here to stay. It'll be here for a while. So it is what it is, right? So Well, thank you guys so much for joining us today. As always, if you have any questions, please reach out to us, and please click that little like button down there and subscribe. We love to hear from you guys.
Thank you so much.